You're watching today's video technical update presented by FX Times. It is Thursday, June 10th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. Today, I'll take a look at some dollar crosses, the euro, the pound, the Aussie, and the Swiss franc. Risk appetite is returning to the market, and the US dollar's safe haven status was not in demand, causing a slide in the greenback. This is still within the context of consolidations or corrections, so I'll continue to stalk and label the internal counts. This video is being produced at about 3 p.m. Eastern Time. We'll start with the euro dollar. Here we are in the daily time frame in the middle of a C wave. All these internal counts haven't been really resolved yet. So let's take a look at right now. We are basically in this the swing projection. You see the market consolidated here and broke below 121.50, and this is the swing projection shown by this suggested by this negative reversal goes to 117, and also if you trade if you project the width of this channel down to the direction of the breakout, it also goes to 117, maybe even a little below it. However, the market right now shows that it's not ready to continue yet. There's a pullback you see here, and we're going to take a look at the 4-hour time frame. But before that, we see this. We may see further negative reversal, which could give us more confidence that the market and that this is just a pullback. So if the RSI reaches higher than this previous RSI, which is already doing, but the price level high isn't higher, that's a very bearish sign. So let's take a look at the 4-hour time frame. This little consolidation here in the daily, this consolidation here is zoomed out here, and at first we saw this declining triangle. So here we have A, B, C, D, E, finishes the triangle, and then a break. So now I'm trying to figure out the internals here. And see if we could. Basically, we are in wave C, so if we whenever we have a break, and this is this appears to be a complete consolidation pattern, so we could be in another impulse wave down. So looking at 1-hour time frame, we see that the market spent the week mainly in this wedge, rising here, broke up above, and we basically have a rally towards 121.50, which is the previous support. So the market, there's several counts here that's possible. We could have had this E here, and then 1, 2, 3, 4, and then 5. Although even though 2 and 4 should have a different pattern, different form, 4 here appears to be too large in scale, but it could be 4, and that means it can't go above 1.2150, which is here 1. So that's one count. Another possible one is that this whole wave is 1, and then we're in 2, and the third wave is coming up. In any case, we see that this is consolidation. Here we see this triangle here. This could be X, and then here we could be in another wave of our correction wave. So here anticipate some topping action coming soon, and if it breaks below this rising trend line, that's one confirmation. If it breaks below this one, that's a stronger confirmation towards 117. Okay. Also here we have a negative bearish divergence, all signs that, and here we have a butterfly pattern, all signs that we may be forming a top here as it tests this 200 moving average in the 1-hour time frame. Here's the pound dollar pair, and we have seen this negative reversal. Market came down, but here it showed that it's not ready to continue. We are in another wave of this correction. This is probably one ABC. So price action coming up now towards this previous support at about 1.48. So market looking to reach 1.48 and maybe a little bit above that to this 50 moving average, 50% retracement. 4-hour time frame to track this correction. So as I said, this may be C wave, In any case, let's go to the 1 hour time frame. You see, we have this break here telling us that yes, this consolidation is not over. There's still some bullish forces. 1 hour time frame, we're in the middle of the third wave. This is the strong wave right now, and should continue towards 148, but we may have a correction and then one more wave towards 148. We know that the market may be topping soon. We had this divergence before, but the market didn't even bat an eye there for this topping action and continue to rally. So this is definitely a third wave, a very strong wave at the moment. The dollar Swiss franc is a very interesting pair at the moment for me, stalking it. Here we are in 1, 2, 3. 3 may be finished. Another count, alternative count, would be 1, 2, 3, 4, and 5, which would be an extended 5. And it could make sense. The fifth wave here is also an extended fifth. So I'm entertaining that alternative count as well. In any case, both counts, we are in a correction. So that's the more important thing in our, time frame, lower time frame. So let's jump to the 4 hour time frame. Also looking at the daily, the momentum here tells me this should be third wave. Ideally, the third wave is the one that's the most dynamic, the sharpest. So looking at 4 hour time frame, market broke this rising support, now testing this power line at 1450, 1445. So topping action seems to be complete. The RSI is below 40, so there's some momentum on the bearish side. And here is some Fibonacci level clusters that the market can come down to test. 1.1250, 1.11, 1 hour time frame. Okay, anyway, back to 4 hour time frame here. We are here in the wave A, right? So back to the 1 hour time frame, wave A here. 1, 2, 3, 4, 5. So basically, we are probably completing wave 3 within this A wave, within wave A, and we should see some kind of 4 and then 5. Okay. So that's the internal structure at the moment developing, trying to complete this wave A. Looking at the daily, the way we could anticipate this is, if the wave A, if there's a rally back up, it could be a flat where the market doesn't break above this. It could be an expanded flat where the market does break that and then come back down. In any case, this wave C, this next wave, after that should have the equality of wave A at least. It could be even more. It could be 161%. In which case it should come back. It should come down to somewhere here. If this is a zigzag, then yes, it could come down even lower, because the market in a zigzag is usually trying to complete this correction fast. Comes down to this area, 1.10 even. So that's sort of the most aggressive target of this correction at the moment. Turning our attention to the Aussie dollar pair, which here in May broke this important support here for this channel. So here we are in this in a correction or consolidation at the moment. So this may have been A, B, and we may be in the middle of C wave. So this could be a flat correction, which means the target has pretty much been reached at 0.85 area. Or it could have a more complex impulse wave. So looking at 4 hour time frame, so you see equality here, A, B, C has already been reached. So not already, is about to be reached. So there at least is some resistance here at 0.85, 85.50. You see that it's also near this 200 moving average and of course the previous high. 1 hour time frame, trying to resolve this pattern. You see a throw over here within this channel, so that suggests that we are here in the third wave. Okay, so whatever, 1 2 1 2, this is the third wave waiting for a 4 correction. The correction in the fourth wave should be, I would expect it to be more complex than these sort of just one wave corrections. Okay, so maybe the top right now is the end to our wave 3, and there may be some kind of wave 4, and then another wave 5 to get us to here, 0.8550 area. Okay, so that's the Aussie dollar. That wraps it up for today. Visit fxtimes.com for more analysis updates, my trading journal, and live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.